Copper is breaking out to the upside. In this video, we're going to look at what this portends for the commodity supercycle, the overall economy, and inflation. Before we get started though, nothing in this video is financial advice. I am not a financial advisor. Please do your own due diligence. It's your money, your responsibility. And if you enjoy this kind of content, go ahead and hit the subscribe button, hit the like button, and do all the YouTube stuff that me and everyone else on YouTube tells you to do. And with that said, let's go ahead and dig into our first chart. This is inventories in almost all markets are significantly below their 5-year median and at risk of depletion. This is a tweet from Paulo Macro. And here he looks at EU nat gas, live cattle, cotton, motor gasoline, corn, crude oil, all the way down the list to copper and nickel being down the most out of all of these commodities. What's the common thread amongst these two metals? Well, they are the two battery metals that are most prominent in building out this EV future, this green future that we keep hearing about. And in the case of copper, copper is down close to 60% below its 5-year median. Nickel is down 70% below its 5-year median. Now, how much copper does it actually take to build an EV vehicle compared to a regular gasoline-powered car? Well, let's take a look. This looks at conventional cars all the way up to battery-powered electric buses. And a conventional gas-powered car takes 18 to 49 pounds of copper to build. A hybrid electric vehicle takes about 85 pounds of copper. A plug-in hybrid EV takes 132 pounds of copper. A battery EV takes 183 pounds of copper. A hybrid electric bus takes 196 pounds of copper. And a battery electric bus takes 814 pounds of copper. Now, the moral of the story here is that it takes 10 times as much copper to build out a battery EV compared to a conventional gas-powered car. Here, Stock Shaman says that copper today, the cost of these items has gone up 1.37%. That's it. A whopping 1.37%. Now, I do not see a world where copper is under $5 a pound this year. Currently at $4.07. At the time of this video, it's at $4.21. Now, what does this actually portend to the overall commodity super cycle? Well, copper prices typically lead the inflation number, as we'll see in the coming slides. But copper prices typically lead the health of the economy. That's why copper is called Dr. Copper, because it's an indicator of the health of the economy. When we're using more copper, that means that we're creating more economic output and stimulus within the economy. And we've started to see this rise, this uptrend in copper in the last week or so. And in the overall commodity market, we've seen a 16.1% rise in 2022. Every other asset class, barring cash, US dollars, has gone down. Everything from REITs, small caps, large caps, everything else, US fixed income, high yield assets, everything else is down but commodities. Why? Because we actually need this stuff for the functioning of society, for the functioning of the world we've grown used to. You know, if you want to turn on the light, if you want to flip the switch, you want to see the lights come on. So all of this stuff is going to require materials, minerals, and metals. And here, Zoltan Pozar says, the Fed will restart QE by summer of 2023. He goes into detail and says, don't expect to put under government debt to prop up risk assets. Unlike QE in the context of low interest rates and a risk asset put, the coming QE will be in the context of treasury market dysfunction. And here I say, capital won't flow into risk assets. Well, this sounds like the catalyst for massive capital rotation into commodities. Because remember, guys, capital doesn't just disappear, doesn't just vanish, go to money heaven. Most often than not. Capital goes from one home to another. When all that liquidity, all of that capital left, the highly levered tech stocks, the cryptocurrencies, Bitcoin, when all of that fled and left those stocks, it didn't just vanish into thin air. It went into cash. And now that capital that's sitting on the sideline, all of that cash, all of that liquidity that's sitting on the sideline has to go somewhere. Where do you think it's going to go? Commodities are still underpriced compared to the overall broad market. I personally think that capital is going to flow into commodities. Now, let's go ahead and take a look at the copper price and what the copper price portends, in this case, to inflation. If we just look at the copper price, though, here in this chart above, we've got the copper price, and the chart below, we've got the inflation rate. But as you can see here, we've broken out of this. Let's pull in a closer look. We've broken out of this 6 to 7 month resistance line that goes all the way back to July of 2022. And we've had 7 consecutive green candlesticks to break out of this resistance line. Now, the momentum is starting to slow down. We could see a retest back down to this resistance line. We could retest this resistance line. What do you guys think? Do you think we're going to retest and go all the way back down? Or are we going to slice through this resistance line and move on up? And what's interesting about the copper price is that if you take a long-term time horizon and look at the copper price versus the year-over-year CPI numbers, you'll notice that the copper price tends to lead inflation. Now, we saw this here in May of 2021 when inflation began its rise up. Inflation was at a near bottom in May of 2021. The copper price had already moved from April of 2020 to June or May of 2021. Now, this move was finally captured in the CPI over the next year. So you see, the copper price had already moved the year prior to the CPI. And once the CPI moved and topped here in, let's say, September of 2022, this was when we hit about 9% or so. We had seen a bottom in copper. This is when we bottomed in the copper price, and now we're making another move up. So does this renewed rally in copper portend to leading another wave of inflation? Let me know in the comments below. Do you think we're going to see another wave up in inflation because of this rising copper price? Now, we've also seen this in other times too. Here in 2011, January of 2011, we saw a spike in a top in the copper price. And if you look down here, this is when we bottomed out on the CPI and began our move up. So this is when the CPI started capturing this big move here. Here, let me show you. This big move here in the copper price. And so it was captured here in the CPI, starting here. So the copper price leads the inflation rate. There's a lag between the two. So with this recent rally, this huge breakout, I mean, look how powerful this big candlestick is. We've had two big candlesticks within the span of 3 months. This is a monthly candlestick look, and we had one big candlestick, another green one in between, and another big one. So on the big long-term monthly candlestick basis, this is some really strong movement in copper. The last time we saw this strong performance in copper was around 2020. I mean, look at these big candlesticks here in 2020. Now, it's also important to look at the copper miners, because the copper miners are the leveraged play to copper. Capital typically flows in to the copper miners before copper starts to rally. And same thing with the gold miners, the silver miners. speculative money flows into these mining companies before the actual metal tends to rally. And that's a signal that the actual metal is on the verge of another move up. Okay. So if we look at this 6-month resistance line, we've recently broken out of it here in the Copper Miners ETF. This is COPX, and we've broken out of it. And it's a very similar story to the copper metal. Now let's look at the copper miners priced in copper. Let's look at COPX divided by the copper metal itself. So we want to see COPX start to outperform the copper metal. Why is that? Because when COPX outperforms the copper metal, that's your sign of another rally up in copper, in the copper price. And here we have this 6-year resistance line that spans all the way back to June of 2017. And we've hit our heads on this resistance line multiple times. We've hit our heads on it this month. This is on the monthly candlestick. Now, if we break out of this resistance line, this is a long resistance line. It goes 7 years. We've hit our heads on it multiple times. So the more meaningful the resistance line, the more meaningful the breakout. Are we going to break out of here? And do you think this will signal the next breakout, the next big rally in copper, and thus the next big rally of inflation? Drop me a comment below and let me know. And if you enjoy this kind of content, guys, go ahead and hit the subscribe button. Like I said, hit the like button. And thank you again for watching. And I'll see you next time. Bye.